But Abhijit Roy, the MD at Berger Paints, is also joining us. He's, of course, the MD and CEO there. Abhijit, hi. Anisha this side. Good to be speaking with you. Well, what's happening with the paints industry? The headlines have been a bit worrying. Increased competition, slowing demand. How's the business these days?
Yeah, so it's been a bit of a topsy-turvy, I would say, period for the paint industry. We had three issues against us, in this last few months. One was the price decrease which we took, about 5% last year in the months of November and January. So that's been impacting the paint industry. So whenever you have a volume growth of 10, you have a value growth of 5 because of the price decrease effect. The second is, of course, a little bit of slowdown in the consumption space itself, across all industries. That's been a trend line. So that's something which has impacted somewhat. And then on top of it, there has been some competition which has come in. Obviously, any competition which comes in for the first time will take some share, and especially if the, money being spent is, quite large. And therefore, all of these three put together, optically, the paint industry looks as if, there is some bit of, trouble in the industry. But structurally, if you look at it, nothing much has changed. I think, going forward, things will stabilize and there will be growth in the industry.
But how long do you expect these issues to really persist, Abhijit? So, price, decrease was a call that the companies took, perhaps on account of the raw material prices. Supply is something that you can't really kind of, fight against. It is the increased competition, and again, consumption as well. How long do you expect this weakness or these factors to continue?
So first of all, the price decrease impact will go away from January. So fourth quarter, this 5%, stress which is lying on the industry will go away. So that's, immediate. The next month onwards, that problem is over. Now, therefore, the two which remains, one is, beyond the control of any industry for that matter, which is a little bit of a slowdown in the consumption space. And the second one is, intensification of competition from one or two players, and that is about 3 to 4% of the growth which is getting impacted, not significant as such, but that is also impacting to some extent. Now our job is to ensure that we overcome this shortfall of 3 to 4% in terms of growth rate and get it from other areas. We have our own opportunity areas which are there, both in terms of the urban space where we are relatively weak in say tier 1 and metro cities. We have put up a separate team for it now, and we are working hard in gaining a good foothold in this market. The second is, there are many distribution gaps in our network. Again, we have strengthened our team in that direction, and we would like to therefore grow aggressively. Our brand is well known, but our presence is not there on the ground in many areas. So that's something which we need to correct quickly. If we do these two well, and it depends on our execution strength,
Sure.
then I'm sure we are able to overcome this slowdown.
Okay. So you're looking at deepening distribution. Of course, the price impact really goes away. But Abhijit, correct me if I'm wrong. You talked about 7 to 10% volume growth this quarter. Are you likely to do that, or is it going to be weaker?
Slightly weaker than that, but the volume growth and the value growth will be weaker than the 7 to 10% that I had expected to be. It didn't pick up to that extent, but it is better than the second quarter.
Morning, Abhijit. How are things?
Things are fine, Nikunj, Uh, no problem as such. There is an industry-wide, as I was explaining, some amount of, turbulence, but I think, we'll get over that.
There are a lot of concerns about competition, but
Yeah.
with competition, opportunity also gets created. Where are you finding opportunity in this chaos?
So there are two things which are, happening. Of course, competition will always be there, has been there in the industry. Of course, there is a new entrant which has come in. When they spend, significant amount of money, they'll probably do an operating loss, which is a huge 2,000 odd crores this year. So therefore, there will be some impact on the ground, right? But as far as opportunities are concerned, I would say that uh, since they are opening up the market to some extent, they have penetrated into the network. it gives us an opportunity to now possibly look at some of those dealers who, having become from one dealer, one company dealer to some company, now there is an opportunity there, so that's one possible thing. But more importantly, I think, from our perspective, we had a weakness, in some of the urban markets. Whenever a good competitor comes in, it also pushes you to work harder, to do better than what you have been doing, and look at opportunities elsewhere more strongly, I would say. So there are three big opportunities. One is the urban market, which, we are relatively very weak. Our overall market share is 19 to 20%, but in the tier one and metros, we are about 10%. So there's a gap there, and largely not because, our brand is not known, because if it sells in, tier two, why will it not sell in tier one? But it is mostly that we don't have the network on the ground. And that's something which we are correcting now. The second part is related to, there are many areas in upcountry as well where we have a relatively weak presence. We have strengthened the number of foot soldiers on the ground. This is a learning which we had from the competition as well, that, and that's something which we are working on again very seriously. So we expect that, these two areas in terms of distribution will help us. In terms of products, we already have some good, very strong brands which are growing in double digits even in this period. But we now need, to look at some of the other areas. One of them, of course, is waterproofing and construction chemical, what we are doing quite well and growing in strong double digits. And so that particular area we can strengthen further, in fact, and can become a big growth driver for us.
Okay, I'll ask you a question directly, which is that AkzoNobel India business is on the block. Does it make sense for Berger to focus on organic growth, or you don't want to focus on inorganic growth? I beg your pardon.
So, Nikunj, it's all dependent on the valuation, and if we feel fit that the valuation is right, we might look at inorganic opportunity also. As of now, the organic growth is good enough. We are having a good share of business in the market. Our profitability is good. We wouldn't like to rock the boat too much, but if there is a suitable opportunity, of course, we will look at that.
What are your estimates for the paint industry growth for next 3 years?
I think the paint industry as a category will grow at, normal growth rates. What we have been registering about 12 odd percentage maybe, in terms of value, volume maybe 10-11%. Typically there is a price increase which happens, of 1-2% on an annualized basis. So that's where I would place it. There has been the traditional, if you look at 25-year history, that's where, in fact, it has been slightly higher than that, but I would peg it at 10 to 12%.
Sure. Abhijit, I remember having this conversation when I had come down to Kolkata and we were having a chat that Birla Opus has set a tall target of 10,000 crores, whether it's possible or not. At that time, you said it's just making its fray. Let's wait for a while and see how they kind of establish themselves. What do you think now?
I still think it is very difficult. Way off, from the 10,000 crore. The 10,000 crore, first of all, was a gross figure. Net sales wise, probably it will be lesser at about 8,500. Even that, will be difficult to do in the next 3 years. So that is, this year they will probably close at around 2,000 to 2,200 crores, is our estimate, and possibly make a loss of equal quantity. So how long this can be sustained is to be seen.
2,200 crores is coming. Is coming off somebody's revenue share, right? Either yours or Asian Paints or others.
Everyone is losing a little bit. Obviously, the growth rate therefore gets impacted to that extent. About 3 to 4%. Is the growth rate impact across companies in the industry. Some might get impacted more, some might get impacted less. So it depends on the geographical spread and where they are relatively performing better. So from that perspective, we are a little bit insulated because, we are much stronger in the East. I think, as of now, the penetration has been relatively low in the East for them. So therefore, from that perspective, yes, it will impact, but it will impact more or less, depending on the geographical spread, it will vary from company to company.
So if I say that when Jio was launched, it changed the dynamics of the sector. It led to cutthroat price competition, and then it took at least 2 or 3 years before logic and rationality came back. So is this like the geo moment of the paint industry?
So this question, Nikunj, has been asked. I don't think paint industry is comparable to the telecom industry at all. Because telecom, if you connect well and if you give a lower cost, there is a switchover cost is very low and a lot of people will go for it, and that's what Geo did. Essentially. That they established lines across the country, and then they gave a very low price to the consumers, and the switchover was very very fast, because it is direct to consumer, right? In this case, in the paint industry, there are intermediaries which play a very very important role. There are dealers, there are builders, there are contractors, there are architects and interior decorators, there are consultants, and they have to come on board in order to penetrate this particular segment. So it's not as if you lower the price, and that has been attempted. We used to give a lower price than Asian Paints by 5-6%. Did we gain inordinate market share? No, it doesn't happen like that. So it has to be a slow steady process, and this is therefore this complete discussion which goes on continuously at the geo moment. I think it is far-fetched, because that doesn't happen in this type of an industry.
Uh, so what would be Berger's focus right now? Will it be to protect the market share? Because if your market share, whenever operating leverage comes back, you will do well. Or you would like to say, I don't care about market share, let me only focus on profit, because as long as I have profit, shareholders will be happy, market share dekh lenge.
No, our focus is very clear, Nikunj. We will protect our market share, and for that we may have to spend some money, but we will spend only in those places where we are impacted. We need not spend all over the place. If there are certain areas, certain markets, certain geographies, certain products which are getting impacted, then we will spend accordingly, intelligently, so that way the market, we may have a little bit of a slippage in the profitability, but it will be, not very significant. So, but market share will be protected.
So, sorry, does that mean that given the fact you're going to invest, the margins will be on the lower side, whether it's the A&P spend or whether the distribution channel investment? Right now, the margins were 16%. You're expecting it to be, let's say, between 14 to 16% range broadly?
We have guided between 15 and 17%. We will remain in those levels most probably, unless the competition deteriorates and we see massive action from on the ground. Otherwise, we should be quite comfortable in that bracket. And at the same time, as I have indicated, we will continue to maintain our market share.
I'll perhaps phrase this question slightly differently. Berger Paints and the paint stocks have been real darlings of the market till about a year and a year and a half ago.
Yeah.
Now, for next 3 years, for shareholders who've been your long-term investors, what should they expect in terms of the positioning? And I'll extend this question for the benefit of our viewers. Paint industry had the following appeal: limited competition, lot of cash flow, 2 or 3 players, and a market which was growing in a sizable manner, largely because of the boom in the real estate and the infrastructure sector. How do you see the macro changing now for the paint industry, and what should your shareholders look forward to in terms of a template?
So this is a good question, Nikunj, because this has been a question which analysts have been asking me off and on. First of all, that micros are not changing. In fact, it is becoming slightly better possibly. The urbanization, which is a major driver for the decorative sale, continues at a good pace. As you can see, we are still at about 36-37% in terms of urbanity, urbanized population. And that every year is improving, right, by 3-4%. And that's a growth driver which continues. You've seen the real estate industry coming back in a big way, and more constructions are happening. These will also come up for painting in the future. So we lag the real estate growth a little bit, as the paint industry is concerned. So that macro part is not worrying, right, at all. Now, what has changed is only one dynamic, which is, the entry of one player who's spending some money to establish itself. Now, obviously, if you spend that quantum of money, and you make some losses at the initial stages, there will be some impact on the ground. And that impact is to the extent of, my opinion, 4 to 5% of the growth rate, of players within the industry might get impacted if you do nothing. Now, if you are able to overcome this, and have your own strategy to neutralize this 4 to 5% loss through other means of, at least 2 to 3% growth from accelerated growth in certain areas, then the growth rate, instead of growing at 12%, we might grow at 10%. All hell is not going to break loose, and nothing dramatic has happened, therefore, in the industry. So if I grow at 10% and my profit remains at similar levels, then I don't see any reason why suddenly, the P multiples or whatever it is, comes down to these levels. Of course, the entire industry in the FMCG space has corrected, because there is this feeling that the growth is not enough, as it was earlier. Now, whether it will come back or not, only time will say. But macros, as of now, it remains robust. There is no reason why, therefore, the demand, which has little bit, been affected in the recent past, will not come back. It will come back. And that will be a good opportunity, therefore, if people, are looking for this, space. I think, there will be growth coming back, and how long, 6 months, 4 months, 7 months is difficult to predict, but it will come back definitely in some time in the next year.
Okay, it will come back. That's the hope. Thanks so much, Abhijit, for candidly chatting to us about what exactly is going on in the industry. Really appreciate your time today.
Thank you.
If you like this video, then like, share and subscribe to ET Now.